Hi, Geraldine Carter with a quick YouTube video, how to get off of hourly billing for once and for all in your tax practice. It's one thing to know that hourly billing is tragic for your business. It's another thing to know how to get out of hourly billing when it's embedded in your business. So what I want to walk you through today is at a high level how I approach this problem with my clients and how we slowly or quickly over 3 months take them from hourly billing to flat rate and recurring revenue pricing models. So let me start with the high level flat rate and recurring billing, and then I'll walk you through what what is a good way to transition your practice off of hourly billing. So flat rate is what it sounds like. The price is the price. Doesn't matter how long it takes me. The price is the price. If I go to Starbucks and I get a 12-ounce latte, it's $3.50. It doesn't matter how long it takes for her to go fetch the milk and heat it up and go find cups and pour it in the cup and give it to me. Doesn't matter how long it takes. It's $3.50, right? It's a flat rate. Recurring or subscription is for back office accounting stuff where you're working with people every month and you're doing their month end close, their reconciliation, that whole bit. And if you're doing that hourly now, you're tracking how long it takes for you to do all the entry and pull down the information out of the cloud and so on and so forth, and then tracking the hours and sending your client a bill after the fact. So that's recurring, right? I'm going to toss in two other pricing methodologies here just to mention them and to say that I don't think that they're appropriate at the outset by contrast. And they are value billing, because there's a lot of talk about value billing, and retainer. So value-based pricing, value billing, whatever you want to call it, is great and appropriate for one-time projects with a distinct beginning, middle, and end. And for projects that cost more than, say, $10,000. Some would say starting at $50,000, but if you have a tax practice in the $200,000 range or $100,000 range, then I think $10,000 is sort of a useful floor at which you can start thinking about value billing. Value pricing for projects, I think, is a more clear way to say that. Under $10,000, it's less worth your time and emotional energy to have a value pricing conversation and send a proposal with 3 options and so on for these kind of smaller projects. So that's number 3, value billing. Number 4, retainer, is not lawyer, top up your hours, prepaid minutes kind of retainer. It's advice. It's like subscription for advice kind of retainer, right? It's more like insurance. So by contrast, those are 2 other pricing methods that I don't think are useful to include in the conversation around getting you started moving off of hourly billing, which helps us simplify down to 2 options, which are flat rate and subscription or recurring, whichever you want to call it. So let's go to flat rate. Flat rate is great for the 2 most obvious things, returns and things like QuickBooks setup. So let's start with where I recommend that my clients start this whole process is to start with new clients, prospects, because they don't know the difference. But you need to have a price for what you're doing. So I recommend that they go through the kind of work that they do and group things like with like, and then take an average. Take the average of what you've billed for the 9965 or the Schedule K. Remember that tax gives me hives. I don't know anything about it. I just talk about how to price it. Group it meaningfully, and then bump it up 10% or 20% or whatever, wherever you think it needs to be, right? If you've been undercharging for years, you could probably bump it up 20%. What you want to do is push it to a place where you go, I don't know if people can be comfortable with that. You want to push it to a place where you're a bit concerned about the price, because what you want to do is repel the price sensitive purchasers. You want the ones who are not differentiating you on price. You want the ones who are not so price sensitive. But that requires a bit of courage to push your own prices. So start with your prospects coming in the door. They don't know the difference. You have established flat rate prices for things based on averages of the work that you've done in the past. So you know that if you bump it up by 20%, you're going to be profitable and it's going to be okay. You've got some margin and some wiggle room, knowing that some people are going to take a bit longer and some people will be a bit faster. So you do that with your business returns. You do the same thing with your personal returns. Although if you've been listening to my podcast, you know I'm not a huge fan of having personal returns because I think it's trap money, but that's a topic for another day. So you can flat rate the personal returns, set the price at 350, 500, wherever you need to set it. You're going to repel the price sensitive ones. We want that. So now you've done it with the prospects and you have a feel for how the conversation goes. The price is the price. It doesn't matter how long it takes me to fetch the milk or go load the printer with paper. The price is the price. Once you're comfortable with that, then you move to your existing clients. You can do this a couple of ways. One of them is the faster way, which is group them in batches that are like with like, set a flat rate for this kind of business return, that kind of business return, set a flat rate for personal returns, and go to them and say, look, some of my clients, this isn't the exact script that I would use, but scripts are elsewhere. So a simple script that you can say is, look, a number of clients have asked for flat rate prices. And what we've done and what I've done here is gone back and taken an average of what it typically costs. So here would be the price if you want to do it this way, or you could just stick with hourly billing. The vast majority are going to go for the flat rate price. Okay. So first start with your prospects, flat rate price, business returns, personal returns, then go to your existing clients, business returns, personal returns. If you want to do the more detailed version, the more high touch version, which almost all of my clients have done it this way to transition, is we start with income by customer summary report. We sort clients in descending order of profitability or how much we like them, or best clients, whatever your measure is of that. And we just go down the list of, okay, here's Jane. How much did I bill her in the last 3 years? Oh, 1,900 on average. Great. I'm going to go to Jane. I'm going to say the same thing. We could either go hourly, or the average for the last few years has been $1,900. Which one do you want to do? She's going to say, let's do the flat rate. And you go through client by client and you look at, on average for the last 2 or 3 years, how much have you billed them? And then you go back and you say, here's how much it's going to be. Okay. So that takes you through your new clients and your existing clients who only do taxes with you, right? And if they have been having kind of intermittent meetings or emails with you, what you can do is bump up the price and say, look, I don't want to bill you for 6-minute increments. You don't want to be billed for 6-minute increments. Another option that you have is for an extra, let's pretend, instead of $1,900, for $2,400, you can have access to me. You can email me or call me anytime, and I'll stop billing you for 6-minute increments. Okay, some version of that, right? So you can offer 2 things. So you go through each client by client, and you say, and you have the peace of mind that the price is going to be on target rather than just batching a bunch of clients and taking the average and hoping for the best. Not hoping for the best. Some are going to be above it, some are going to be below it, right? So some are going to see a significant price increase, some are going to see a decrease. It's probably not going to be quite as seamless, but it will be faster. So if you want this one client by one client by one client methodology, you go through, you average, like I said, the last 2-3 years, and you have a conversation with them, and you can say, we could do the flat rate, we could do the hourly billing, or there's this third option where you get increased access to me. You could call me, email me for short, easy stuff, and I'm not going to bill you for it, and it's an extra $500 a year. Okay, so that takes care of your tax return only clients. Let's go to your accounting services clients. So let's talk about the ones who you bill 4 hours, 10 hours, whatever a month, and it kind of goes up and down. So same thing with them. Look at the last 3 months. How much have you billed them? And offer them a flat rate. Now you're going to say, well, what if the workload goes up? Well, a growing business is likely to have workload going up. So if you think that's going to be the case, then you say, here's your flat rate for the next 6 months. And because businesses grow and change, we reevaluate every 6 months, and we'll adjust your price if we need to. There you go. So you're not locked in. And you do the same thing in preparation for your prospects who come in the door and they ask for the price, and you say, we can't tell you how much it's going to cost until we understand what we're doing. So you get in there and you do your due diligence to figure out how much time and effort it's going to take. And then you suggest a price and you say, we're going to start at this price for 3 months and we're just going to test it and see. And you have to do your honest legwork in here to not come in at a low rate to get them on board as a client and then bump them up by 100% 3 months from now. You don't want to do that for a lot of reasons. Do your honest legwork, figure out how much you think it's going to cost, and then you'll say, after 3 months, we'll reassess, and if we need to adjust the price, we will. So that way you're not locked in. Okay. So you do it first for your prospects, which I think is always easier because they don't know the difference. They don't know any better. They haven't been trained on hourly billing, which is a good thing. And then you do it for your existing clients. Okay. So that's how you move through your client roster. And depending on the service that they are in, you establish the flat rate that they need to be in. And you also think about the service that would best serve them and put a price on it and offer it to them. Okay. So you may find that some of your clients may bump up in service level and in price as you make these transitions. Okay. So move through your client roster, figure out what the flat rate needs to be or the recurring billing needs to be, and transition them one by one if need be, or better in batches. But either way, just move through your client roster and transition them into the better pricing methodology. So that's what I have for you today. If you want more like this, be sure to subscribe to my 5-day free email course. It's Better Pricing Strategies for CPAs, which you can do in many places on my website. And if you want more support and information, check out my website, shethinksbigcoaching.com, where you can find out more. Thanks and have a great day.